Hello and welcome to another Major Market Movements End of the Week Market Review for October 16th, 2015. I'm Quad G, and in this video we're covering the precious metals complex, starting off here with gold. And just to let you know, I've dropped Net Dania. It was having some trouble with its feed and what have you, so I've kind of replicated things here on TradingView, which is certainly behaving far more stable. And I can also add a few more with this 8-panel screen. I can add a few more oscillators and some volume and a volume chart here, and then give us a little bit more detail on what's going on with the market. So starting off here, this is a 15-minute, but let's go to the 2-hour first. We continue to see the uptrend here in this market. We got higher highs and higher lows continuing. The last real swing low was right here in short term, and that low was at 1163.35. So while we're above that level, I think gold is still in an uptrend and could still see another move to the upside. The QG3 is still in a bullish alignment. It looks like the day is going to close right there at the 3 EMA, possibly just taking a breather here before giving us another push higher. On the weekly basis, we close, let's see, this is the highest weekly close we've seen since all the way back here in June, so several months. That's bullish. And this oscillator right here is a slow stochastic, and it's one that let me go in here, go into indicators, to show you where to find this in case you're interested. Look up slow stochastic here, by Alshri 17. I've been watching this one for quite some time, and I like the way it goes about its business. So primarily the slow stochastic, is a momentum indicator and an indication of topping action or bottoming action in oversold or overbought territory. So right now, as you can see, we had momentum to the upside when the signal line, which is black, is above the baseline, which is red there. We've got bullish momentum to the upside as long as those are open. But now you can see over the last couple days, that momentum has closed out, and just an indication that we're moving into a corrective period in a overbought territory, which is above the 80 level on this particular oscillator. So this means that, doesn't mean that a top is in, but it does mean that there is a potential of a top here. It's a good idea to pay attention to other indications of what's going on in the market and judge whether or not to bail on the position or take up a short position or something to that effect. So, but right now, yes, we've lost some momentum, and we're actually opening back to the downside a bit with today's close. Overall, that is a bearish development. But this is just one facet, one tool in a vast tool bag of other indicators. So I would say this is at least an indication of some softening into the upside and moving into a corrective period. But I'm not sold on the idea that we have a significant top in place at this time. Currently, this is the EWO here, and we don't see any negative divergence developed yet in this market. So I think there's still some upside there. The RSI still has a little bit more room. We've broken the 60 level, and I think there's a little bit more room at least to come up and test the 70 level, similar to what we saw back here in August, where the market came up, tested the 70, and then saw a rejection. I think we could see the similar type of action going forward into next week. Maybe one more pop higher, test that 70 level, and then maybe come back down, maybe setting a key top. Right now, the MACD is open to the upside there, so that's bullish on the daily. Also like to review the weekly here. So let's take a look at that. On the weekly, we are bullish also to the upside. And then this chart right here, these bars on the right are volume indicators over price territory. So, and it's within the price that's being viewed on the chart. So as you adjust the chart, it's only going to accommodate the price territory that's covered currently on the chart. So the one reason I like this particular indicator is that when you want to get an idea of where the market may be heading, this volume inside of price ranges can give us some idea of where this like creates gravity in the market that can pull the price up into it and can also act as a spot where the market may want to top. And as you can see, as we encompass the price territory all the way back here to the drop of the previous impulse to the downside back here in March, all this sideways chop has developed quite a bit of volume within a certain price ranges. And you can see right now the price has been sucked right up into this prime spot right here between 1180 and 1190. And this is one reason I was speaking of or writing about this in some of the previous reports, the 1180 to 1200 range. I was looking at this particular indicator as just one more tool to indicate that maybe the price is going to come up and test this area, and sure enough it has. This is also a potential topping range right in here also. So we'll watch and see what's happening here. The next range higher is this next little bump right here, and that's right there at about 1202 to 1213-ish, 1211, somewhere in there. That would be the next place. If the price, this impulse can overcome this particular hurdle, then this is the next spot it could be heading to. All right. Let's go ahead and take a look at silver. Okay, silver on the daily. Oh, wait, hold on. Let me back up here. I'm going to go to the daily chart here on gold and just give you another look at this. I'll say gold daily. So yesterday we had this potential harami, and long-legged doji at the end of a long uptrend. And today was kind of a telling day. We did see it come down and it did close negative. However, it didn't close down below the end of the harami here. If it had done that, that would have been bearish, and I may have been considering letting go of another tranche or getting in short, something like that. That would have been an indication to me that maybe we topped out here at 1190-ish, 1191. However, we didn't get that today. Just kind of a more or less an inside negative day, which is just very neutral. If this day had come down and closed below this positive candle, the origination of that positive candle, which opened up at, let's see there, 1168.38. If that price had come down and closed below that, that would have confirmed this harami. It would have set a significant top, and we would have been interested in selling in any of the long side position and entertaining a possible short position. So, but we didn't get any of that, so it's just very neutral. All right. So let's go forward into silver. Similar, almost had the same type of scenario here, but it only gives us an inside negative day, which is neutral. The QG3 is still in a bullish alignment to the upside. You can see that the 10 EMA here, this green trend line on the daily basis, not trend line, but moving average. It's actually exponential moving average. It has held support the last couple dips here, and it may continue to do so as it moves higher. So watch for that. And silver on the weekly, we close higher. Highest weekly close in silver since all the way back here in June. The slow stochastic here is still open to the upside on the daily, so there's still some momentum to the upside there, believe it or not, and according to that indicator. And the EWO here is still doesn't have a negative divergence developed yet, so it's still looking bullish. The RSI has a very slight negative divergence. We get a higher high in price here, but the RSI has a lower high between this last swing high. So just a slight negative divergence on the top there, right up into not quite hitting the 70 zone. I would say that if you saw the RSI come down here and drop below this little swing low here in the oscillator, that would be confirmation that, yes, in fact, we did have a negative divergence there, and it is producing a negative slide in the price. The MACD is open to the upside. That's bullish. That's on a daily and on a weekly. That's still open to the upside as well, still bullish. Silver on our price volume indicator. Let me go back here some. You see silver's fighting this zone right here, roughly between 1583 and 1611, 1615, which is the predominant group. This price range had the most volume in it. Is basically what this is telling you. Is that price range that I just told you between 1585 and 1610 has had over this whole price range, basically starting all the way back here in basically January, from as high as 1845 to the low, this price range right in here has had the greatest amount of volume traded, both bulls and bears trading shares or contracts, and that is producing this particular zone, which currently we are running into a little bit of resistance to. If that area breaks, the next little hump right here is a little bit higher at about 1666. So that's another potential area for some topping action. So hope that covers that tool well enough so you can start using it. Now, I do believe to get to this tool, you have to be subscribed to TradingView. You can't use a free account. You can go to indicators here and go here to volume profile, click on volume profile, and click visible range, and that will give you the this particular tool. But again, I think this is a premium tool that you have to pay for with a monthly subscription. Okay, let's go ahead and move along here. This is Platinum. Platinum has done a fine job of producing this impulse higher out of this kind of a choppy ending diagonal fifth wave to the downside. And I do think we could see this price come up here. I don't think it's going to break 1035. We may stall just underneath it. But it does set up a potential right shoulder, or right neckline actually. Come up into a right neckline of a potential bullish inverted head and shoulders pattern. We could, after testing that area, pull back into a right shoulder, a dip down here, maybe all the way down here into the 950s, 960s again. And then from there, we could see a really strong rally out of that potential bottom. So this is a nice, looks like a nice clean impulse. Let's take a closer look at it. Go to the hour. So it looks like we got 1, 2, 3. We got a choppy 4. Now we're working on the final 5th to the upside, which may not be complete. We may get a few more oscillations to the upside while we're above key support down here, that low being at 993.80. So while we're above that level, I think we could edge up a bit higher, but I think it could be a final 5th for this impulsive run, and then we see a three-legged pullback again down into this, somewhere between 940, 960 in this range, I think. Probably filling in some of this manic shot up in the market, and then that's the place to watch for bottoming action. I do also notice this manic pop up here that never got back tested, backfilled, so that's also a possibility. See if we can go that low or not. Okay, QG3 is in a bullish alignment to the upside, and we are closing yet again another day above the 3 EMA. So we're still in impulsive territory while we're above that 3 EMA on the daily closing basis. The weekly, again, closing higher, and so that's bullish. Our slow stow here. Oh, come on, move for me. Are you going to move for me? Come on. There we go. We are well into overbought territory, and we can see today we just we basically kissed and then reopened back up today with some momentum to the upside yet still. So that still leads me to think that maybe there's still a little bit more, this will offer a little bit more price action to the upside again while we're above that key support. No negative divergence built up at all in the EWO. That's looking bullish. RSI, we broke in the 60 level, and I think there's a good chance we could come up here and test the 70 in this particular run. But more likely, I think that's going to be a ceiling, and we'll see a pullback from there. MACD on the daily is open to the upside. That's bullish. And on a weekly, we're open to the upside as well. That's looking bullish also. And again, our price volume indicator. Let's see, let's go back here. Let's pull in some price territory of this whole five-wave impulse to the downside will encompass all of that price range from the top to the low. And you can see we broke right through that particular hump in price volume, and now the next hump higher, which is a potential target, spans from about 1110, 1108, something like that, to possibly all the way up here to 1147, 1150, something like that. So I do think the market could be targeting that area eventually. If we do get a pullback, let's see, let's bring in that range a little closer. If we do top out here and do get a pullback, this particular range right in here is a potential level for support, and then also this hump right here, down here at about 950, is also another level to pay attention to for potential bottoming action. All right, let's take a look at GDX. All right, so GDX continuing to move higher. It's starting to move up a little, into some choppy behavior here. I don't think we're finished to the upside yet, but as long as we're above the last little short-term swing low there, and that low was at 1562. So while we're above that level, I think we could still eke out one more wave higher at least before moving into a larger correction. The QG3 is in a bullish alignment to the upside, so that's bullish. And the weekly close, we shoot up here and it closes as a negative candle. This would be bearish if we got some confirmation with, say, next week came down and closed below this intra-week low there at 1562. We saw that happen. then yeah, we probably sealed in a significant top and we're starting a larger correction. So still wait and see on that. The slow stow here is still open to the upside. We're still hanging above the 80 level, and it is possible, since we didn't get immediate rejection upon this crossover right here, we could be reaching into what's called an embedded status here on this particular oscillator, meaning we could continue to see this market move higher, and while we're above that 80 level, it could just oscillate back and forth as it moves up into an impulsive series to the upside. Let me see if this market has generated anything similar to that. Oh, we can see it here on the downside. In this downside move, it was very impulsive. You can see that the slow stow went into the underneath the 20 level and popped up once, but came back in and just stayed. While this impulsive drive was taking place, the slow stow was just buried below the 20 here for quite some time. So same thing could happen here, since we didn't see an immediate jump right back down upon reaching that overbought level. Okay. The EWO, still no negative divergence there yet. RSI, not quite a negative divergence there either. Very close to, but not quite a negative divergence on the bottom side of the oscillator, but still, again, not quite there. So I'd have to leave open the potential for another move to the upside in the price until we develop a negative divergence there. MACD is open to the upside. That's bullish on the daily, weekly. Also open to the upside. And let's see what our price volume indicator can tell us here. Going back here all the way to March, this particular choppy move up on the upside of this particular impulse to the downside, we're measuring that, and you can see that there's this price hump right here at about 1930. So that's going to be an interesting spot to watch for any topping action. And then also, if we do, with this run up, which I think is just a wave 1, wave 2, working on wave 3, we'll see a wave 4 pullback, I think, after this wave 3 up is finished. So that pullback, where can that pullback potentially land? Obviously this bottom right here developed all kinds of volume, so that is that does create some gravity. However, if the Elliott wave is correct, we're pulling back into a fourth wave only. So there's really nothing that stands out between here and there. The very slight hump right here at about 1547, but nothing that stands out exceptionally. So this particular tool may not give us a good spot for a wave 4 target. But do pay attention to this level right here, 1342. If the price was to come back down here that far, get pulled down here by its gravity, this range could also become an area of support if it was to do that. I don't think we're going to get there yet. Could we get there later? Potentially. But for now, I'm counting on the Elliott waves producing a 5-wave move to the upside, and we're still only into wave 3 here. All right. GDXJ. Actually, for time's sake, I'm going to scrub going over GDXJ. If you want to set these up on your TradingView account, by all means, go for it. And you hopefully can use the information I just provided you to set this up and start looking at it for yourself to determine market behavior. So Let's go ahead and move into the Elliott wave charts. Okay, so here's gold. Again, we got this long-legged doji. Didn't quite see any commitment to the downside, or for that matter, to the upside. Just an inside negative day. It's neutral. This particular count from this bottom is convoluted. I could see multiple different types of counts, some extremely bullish and some bearish. So I haven't really committed to one particular count on this run just yet. I like to wait until a count is, you can really see it. It stands out. It makes itself noticed. And right now, I would say there's no particular count that's really standing out saying, hey, this is it. This is what I'm doing. So at this point, I think it's just best to uh, use other technical analysis to determine what the market's up to. I do think there's still some room for this price to go up to 1205, and I would prefer to see the price stay above this little swing high right here. That high is at 1168.87. I'd like to see it stay above there. And if it does that, I do think we're in good shape for another push higher. Drop below that, then we start getting into some iffy territory, and we could actually indicate that we've topped out, and we might get a larger correction to the downside. So here's a silver count. We got wave 1, wave 2. It's a expanded flat 335. Got sub 1, sub 2 sharp, sub 3, which we've gotten a flat correction for sub 4, and now we're working on this sub 5 to the upside. Now sub 5 technically could be in. It could be finished here. But the reason I don't favor this particular wave 5 being in is because we didn't see an immediate drop-off, impulsive move back down below the extent of wave E, which is the end of wave 4. There at 1578. And because we didn't do that, we've kind of moved into a choppy downward slope and forming what could be a bull flag here. It makes me think that wave 5 is probably a little bit higher, and that actually this is a sub wave 1 of this wave 5 black, and we actually got wave 1, wave 2, wave 3, 4, and 5 yet to go to finish that black 5 of 3. And then once that's finished, we could drop back into wave 4. Now, since wave 2 was irregular flat, wave 4 is likely to be sharp, more than likely coming back in to test the middle of this congestion area. And then from there, maybe one more push higher, possibly into the latter part of the month, is my thought. Maybe up into the full moon cycle, which I believe is on, if I remember correctly, on the 27th in the last week of the month. All right, let's look at GDX. Again, I think we've got a wave 1 here, wave 2, wave 3, wave 4, and we're working on wave 5, which I don't think is finished yet. I think we've got a wave 1, 2, 3, working on a little 4 to the downside, and one more push higher early next week into 5 of 3. And then from there, we could move into a choppy sideways 4. Since wave 2 looks sharp to the downside, we need to anticipate alternation in our corrective modes. And so this particular mode for wave 4 is the probabilities favor that there will be a sideways choppy move for 4 before another impulse to the upside for wave 5, which more likely will come up to test and pressure this blue trend line, which has been a significant resistance for well into 2013. From there, there is a chance that the market could use this opportunity to reject this impulsive bullish move, and we could see a drop off into a final fifth of 2 for what could be a major bottom in the price of this of GDX, gold mining stocks. and then from there we can see a strong push higher into what could be a massive wave 3 incline. Okay. All right, so that's going to conclude my coverage of the PM complex for this week. I hope you all have a great weekend, and we'll be talking to you later. Adios.